What's up, guys? Welcome back to the weekend edition. Today we're going to be taking a look at where price came from last week, where price ended on Friday, and where price is likely to head into next week. We're going to be taking a look at Tesla's chart, but before we get going, don't forget to check out the links in the description below. Links to the Rawstocks and Traders Helping Traders Discords, where I'm hanging out during market hours, as well as a link to upgrade to premium on the Rawstocks Discord, and a link to a Top Step, which is a futures funded trading prop firm that allows traders to try to pass trading combines in order to become a futures funded trader, which is something that I have recently done in the last couple weeks. Became a certified futures funded trader. And so if you feel like checking that out, the link is in the description below. Let's dive into the charts. So we had a really nice week last week. Had a nice, bullish run on Wednesday, Thursday after some selling. And ultimately, Friday, we had a little bit of a profit-taking sell-off into the end of the day. Rallied back up from the low, but still, nonetheless, it was a red candle, black on my chart, bearish candle. And we'll look at what that means and what was actually happening there as we look on some of the lower time frame charts. It'll be more apparent. If we're looking at the daily chart, though, we've been talking about this for the last couple weeks, right? Is that we saw a bottom, saw price rally up. The top of this candle from the 30th of January is what gave us our weekly bearish fair value gap that we've been trading into. We talked about the draw on liquidity that was going to happen inside that fair value gap as we return to it. Then we saw price come back down. We saw the stops get stolen. We saw price run the old low. And then the very next day went ripping up. On the 5th of February, we didn't close below that previous low, so that was the steal. All right, we did open below that, but we rallied up hard and still closed above it. This is smart money accumulating their positions, going long. Right. And then we saw price rally up, failed to deliver on the old high, came back down, gave us an optimal trade entry. Right, and that optimal trade entry was from the swing low to swing high here on the failed to deliver. Pulled back down, not quite to the 70.5, but inside the optimal trade entry range, where we also had a 4-hour order block, and we'd been talking about that a 4-hour inverted fair value gap that we had been talking from previously when it traded back down into it on the 7th of February, and we recycled back into it on 2 separate days on the 13th and 14th. Again, reaccumulation of smart money going long, getting their orders filled between the low here and the inverted fair value gap and the optimal trade entry. This is where smart money is going long. We talked about this in great detail, right? This was our entry. This was our smart money entry areas. Then what happened? We saw price go ripping Wednesday, Thursday. Right? Where did it go? Again, it went to the bearish weekly fair value gap that we talked about, the draw on liquidity. Okay, I called out on the Discord that we would be trading into this fair value gap, whether we closed it or not this past week, which we did not. That was still hadn't been seen yet, and we weren't sure if that was going to happen last week or maybe coming into this week. But we did know we were going to draw into it, right? We already tried to get up to it. We failed to deliver. We drew into it now. Saw that nice run up, and on Friday we got some profit taking. Not abnormal. You can see the RSI here is also still below the 50. Right? But we had some nice bearish divergence also, and we'll be looking for price for RSI to continue up as price also continues up to draw deeper into this fair value gap. Now that could be all she wrote. We might get to the gap fill here, right, into the fair value gap, knowing there's liquidity there. Could see price come back down after that. We'll wait and see what price wants to do when it gets to this gap fill, right? We'll be watching this candle open and close as some indication of whether or not price is going to stay below that candle close on the 24th of January, or if it wants to draw up onto it back down up to the candle open. If it closes above that candle open at 211.87, we will be looking for price to continue to run on additional buy-side targets. Whether that happens quickly or whether we see some kind of back and forth, that's a key level we're going to be watching for. So I'm going to go ahead and put that on my chart there. Right, the high of it is basically at the same point as the upper boundary of the bearish weekly fair value gap. So I'm not going to mark that off on the chart, but I will mark that candle open from the 24th at 211.87. And if we close daily candles above that, I'll be looking for price to run up even higher. And where are those higher prices? We're looking at the highs of previous day wicks, and that could be found at 215.66, 217.75, and then there's additional targets above that we'll talk about if we get closer. So let's drop into the 4-hour time frame, and the 4-hour time frame does show us there's also a 4-hour bullish fair value gap. From that run up on Thursday, left a nice 4-hour fair value gap. We've drawn into it. We've drawn back into it. We are currently inside of it. Could draw down a little lower, all the way down to like 196.32. Could even see a move of manipulation that wicks below it, right? But I don't want to see a candle close below 194.68. If we're closing below that candle, the 4-hour candle open from the 15th, the 4-hour candle close from the 15th, right? If we're closing below that, that's not a good sign. The sign is we're going deeper down if that is the case. But right now, as long as we're just drawing into this 4-hour fair value gap, still fair game to have price run higher. Okay, if we also drop into the 1-hour chart, you can see on the 1-hour chart, additionally, there's another fair value gap. 1-hour fair value gap remained open, traded up above it. We've come down into it a few times. Still currently in the 1-hour fair value gap as well. Not as important that holds, because we also are in the 1-hour fair value gap is also inside of the 4-hour fair value gap. But I would like to see it hold. As you saw, held price here, and we even tried to wick down and it held price here. It would be a stronger sign if this 1-hour fair value gap holds, and then we see price make a run at the old high of 205.41. But if it gives it up, we still have the 4-hour fair value gap before we start to see price really break down. And again, same with that 4-hour. We got the 1-hour. These are the candles that we're talking about. This up close and this open price, right around that 195, 196, right about that. Right. If we start closing candles below that, we're going to exit our swing trades, and we're going to look for price to potentially deliver even lower. Lastly, we'll look at some short-term time frames to just kind of take a look at what happened on Friday. We had our London range. We were trading, we had a volume imbalance here. We were trading up during pre-market. All right, we came down. We ran out the stops. Okay, we popped back up. And ultimately, we get our 8:30 PPI data drop. We get a move down. All right, and then we were never able to really climb back out after that. We get a nice sell-off again, 1-hour fair value gap. We see a rally. We don't even get to close above old highs, if you will, right here. We didn't quite make it. Sold off. This is just a triangle, though, right? This is just a bull flag, if you will, where we can see that we were not able to break above, the resistance, but we were also setting, right, higher lows. So no new lows, no new highs, just a triangle pattern into the end of the day. See some consolidation closing out the aftermarket hours, and we'll be looking to see no trading on Monday, so we'll be looking to see if Tuesday brings us another move of manipulation, right? So this should be an accelerated power of 3 this week, because it's only 5-day week, so we are likely to see the manipulation and the beginning distribution start all at once. So bias right now is bullish, and so I am looking for a manipulation move. Maybe we start trading up and then drop down to manipulate, but I am looking for the manipulation move to come to the downside to try to bait bears into the short positions. And then ultimately, again, delivering back above the 205 into next week. So we'll be watching to see if that happens. I'm not going to drop into the lower time frame charts on the weekend edition right now. We'll be looking at that on Tuesday after market closes, looking for those sniper entries, those day trades, those scalps that we love to take. Currently in some swing trades that expire in one expires next week, and then we got March and April contracts as well. Most of those are doing pretty well. The March one is fairly new, and it's down just a little bit. We took it on Friday. Happy with the entry, right? I think we took it down here. It might have been up here somewhere. Anyways, it went up a couple $100, but it's a swing trade, so I didn't close it. Ended up down about $300 currently. But again, looking for 205 to get taken, draw even further up towards that 207.55, right? And then see if we want to see a price reaction there that's going to take us lower, or if we're going to be able to push through that weekly fair value gap, really get some bullish momentum going, and then drive price even higher. So hopefully this has been insightful for you guys. Again, don't forget to like, subscribe, share with all your friends. Channel continues to grow. The Discord continues to grow. The Discord's free for general members. Upgrades only $25 a month. You get free custom call outs with that. You get access to the book study live. And you get some additional stuff as well as a premium member. So appreciate all the support. Hope you guys are having a great weekend, and we'll see you on Tuesday's trading session.